Good afternoon, ladies and gentlemen. Today we are honored to welcome Mr. Sundararaman Ramamurthy, Chief Executive Officer, Executive Director, and Managing Director of Bombay Stock Exchange. It is Asia's oldest stock exchange and one of the most influential financial market institutions in the world. Mr. Ramamurthy leads BSA at a pivotal moment when India has emerged as one of the fastest growing and most digitally sophisticated capital markets globally. Under his leadership, BSE has modernized its trading engine, strengthened its derivatives segment, expanded its digital infrastructure, and enhanced cybersecurity readiness, and pushed India to frontier of global settlement cycles with same-day settlement. Across 4 decades of his career, spanning from National Stock Exchange, Bank of America, State Bank of India, and IDBI, he played a major role in building India's trading and clearing and risk management and digital market system. His deep contribution have shaped India into market distinguished by high liquidity, strong retail participations, and global class market integrity. Today, he joins in Jakarta to share India experience in building modern capital market technology that could support our own transformation toward deeper liquidity, greater liquidity, and more secure transactions of Indonesia capital market. Mr. Ramamurthy, thank you for being here with us. And let's begin our conversations by looking at the broader transformations of India capital market infrastructure. Can you, to set the stage, could you walk us through how India capital market technology infrastructure has evolved in the past decade, and what were the most transformative shifts that brought country to here it is today?
Thank you, first of all, for having me here. It's my pleasure. Indian markets, like many other markets, started its stock exchange by trading in a hall, what we call as ring. At that point of time, there was no technology. Last 3 or 4 decades have seen a great emergence of technology. Our regulatory setup came into existence in the year 1992. Our governments have been working consistently on making markets more efficient. And today, what it has culminated into, from trading inside the trading hall, it went first to the broker's office. And from broker's office, it went into the laptops and desktops of the investors. And today, it is there in their pockets in the form of mobile trading. What has this transformed the market as? From multiple stock exchanges, around 20 plus stock exchanges were there in India, with scattered liquidity, minimum amount of trading, no great free float, no great foreign participation, and no great mutual funds or domestic institutions. From the type of a situation, today what we have is longer trading hours, 2 main stock exchanges, greater liquidity, multiple stocks regularly getting traded well, good amount of domestic and foreign institutional participation, and overall, the most important thing is digitally, the entry into stock market, the trading in stock market, the exit out of stock market, awareness about the stock market in terms of investor awareness programs, and investor protection in the form of online complaint capability, online complaint resolution. All this digital journey has ensured, most important thing is trust by the investors on the market. All the numbers jump today, what we are seeing is because of that. From a few thousand transactions, today we trade 1.2 billion trades in a day in cash equities, and roughly around 8 billion trades in cash equity derivatives. In equity derivatives, 88 billion. Our capacities are all far higher than this number. So that's what is the technological evolution in India.
Wow, that's a very big number you're saying there, and India has now one of the largest retail investors community around the world. And how deep the ecosystem help build that trust into India's capital market?
The regulators played a very important role, apart from the government's policy directives, in ensuring that this happens. The Regulatory Act, which came into existence in 1992, in its preamble clearly states the purpose of the regulator is to protect the interests of investors. So therefore, all our systems are ID specific at the investor level. So as I was just telling in the previous answer, there is a good amount of trust built for the investors. India is a very old civilization with a very young population. The median age of India is 28 years. 65% of the population are income earning age, say from around 18 to 65 years. A good number of people are below the age of 30 and good number below 40. And this income earning population is scattered across the entire country. We call it as B30, beyond 30 cities, beyond the top 30 cities. The literacy levels are higher and technology has ensured that mobile trading is very prevalent. And given all this, in the last 5 years, the number of registered investors, we call it as registered unique client codes, has jumped 4 times. And currently it's around 225 million registered unique client codes is what we have in the Indian equities market.
And India as well as Indonesia as developing market usually have to depend on foreign capital in their capital market. Are you saying that this large base of individual retail investors in India, local domestic investors in India, has helped stability of Indian capital market?
It's a very good question that you are asking. 15 years before, if foreign institutional investors, say at the end of the year, sell off their investments in India because they want to book profit, the market will shake and fall down. Not today. Why? There is a very strong presence of the retail investors in India, which brings stability, and also the domestic financial institutions in India, insurance companies and mutual funds are also bringing in stability. In terms of capital holding, earlier on FPIs used to, if we call them as FPIs, foreign institutional investors, used to hold around 20-25%. Today they hold around 17% of the issued capital. But the domestic financial institutions are now holding more than them. It has crossed already the number of FPIs and they are holding more percentage than the FPIs. That's point number 1. Point number 2, apart from this 225 million retail investors who are there registered in the stock market, 5 to 10 million of them regularly trade in some fashion or the other. There are significantly large number of people who invest money into mutual funds. Every month, through systematic investment plan, around 3.5 billion US dollars are invested into the market by the retail investors through the mutual funds. There are around 50 mutual funds who are present almost in all the PIN codes, the postal index number, identification number, codes across the country. From all the PIN codes, mutual fund is able to garner investors. And there is a large group of people today, more and more coming into mutual funds because of the diversified portfolio. Clearly, therefore, the domestic participation into the Indian markets, 1, has brought all the people into the fold and their contribution to the capital creation. 2, provided great amount of stability to the Indian market.
And as well as the stability, it can help the local company as well to raise capital to drive Indians' growth, economic growth. Because in the third quarter, India's economic growth is 8% and Indonesia just 5%. We are going forward at taking effort to have Indian 8% growth. Do you think that this capital participation of Indian individuals, Indian retail investors help India to drive their economic growth?
Absolutely. The IPO, initial public offering as we call, has been a boom in India. Last year, as you may recall, we had the largest number of IPO issues, and in terms of value, it was the second largest.
Yeah.
Last 2 years, consistently, around $20 billion is what is raised annually as IPO process in India. The retail participation into this IPOs ensures that the IPOs are oversubscribed multiple times whenever the issue comes. For any country's economic growth, capital formation is very important. These IPOs provide the capital. The capital formation helps in setting up of industries, service areas and whatnot. That generates employment. Employment generates income. Income generates consumption and saving. All go to contribute to the GDP and economic growth of the country. Clearly, it's a nice cycle, and the government's proactive policy measures and the regulatory support in ensuring investor protection, apart from technology, are the most important drivers because of which a trust by the retail investors into the market. Therefore, they directly investing also through domestic institutions, making it stable, attracting more capital, and thus fueling even more the country's growth.
Yeah. In India, you have payment and transaction ecosystem, particularly UPI and ASBA, if I'm not mistaken. It's credited with making IPO participation and retail investing extremely simple. How the coordination between regulators, between the capital market players, between the banks, exchanges, made such integration possible, and what can Indonesia learn from India experience?
What I have found as very unique and very good about Indian market is, and Indian regulatory system is, Indian regulators are evolving very fast. Why? The regulatory setup in India was born only in 1992. So while every exchange, like Indian exchanges, were born long time back, in many countries the regulators were born much earlier. Whereas Indian regulatory setup and the regulatory law came into existence in 1992. From 1992, since there is a fast evolution, because for a long history has to be caught up, there is a catch-up game and also staying ahead game, and staying to the top was another game. All these three have to be played by the regulator. So in India, the regulators do a wonderful thing. They do not unilaterally give any regulation. They co-create the regulation through a consultative process. Any regulatory change they want to bring in, first they discuss with some market experts. Based on their understanding, they put in a consultation paper. That consultation paper is available for public comment. Anybody can comment on it within a stipulated time. The regulators collate all those views and then form committees. In those committees, they call intermediaries like us, market intermediaries, brokers, and all the relevant people. And before them, the outcome of the consultation process is put across. And based on the discussions with them, the rule is formed. So this has consistently helped in improvement of the regulation, improvement of market infrastructure, acceptability and adaptability to a regulatory change are very high because of this unique system that we have in India.
So that's what Indonesia can learn from in India as well. Any other?
I am not big enough to tell what Indonesia should learn. I can only share what India has done very well.
Yeah.
This is one of the areas. Our payment systems are wonderful in India, and coordination between various regulators is very nice. And the government always thinks everything from a market related perspective and how the consumers will take it and what is good for the economic progress. And there is a consultative process even within the government. For example, every year before the budget announcement, the government minister calls for a meeting with industry specialists. In closed door meetings, their ideas are taken. Apart from taking ideas through mails and letters, all these ideas are collated so that the government knows what is pinching, where it is pinching, what they should address. Everywhere there is a nice consultative process which is making the economy grow at 8% rate.
And this process, I believe, will build trust from investors, from industry players, and from regulators as well on the ecosystem as large. But we cannot help to experience, like there were panelists were saying in our discussion earlier that Indian and Indonesia people are clever, but their cleverness work both ways, for good and for the bad one. And how you deal with maybe some fraud exchange, maybe some fraud on the investment in India. What are the lessons that we can learn? Because if there are more individual investors coming into the market, there will be more risk for that kind of fraud.
It's a good question that you are asking. Always in any society, there will be people with very different intentions. And some of those intentions will be branded as good intentions, and some of them will naturally be branded as bad intentions. The idea is always to protect people from bad intentions. How does India achieve it? Here again, our regulatory setup plays a very important role. First of all, why somebody is cheated? If he does not have enough information about something, or if he is missold a product, that means again lack of information, then he gets cheated. So the regulators want to avoid any such lack of information or misinformation. So people who can provide advice, there is a qualification stipulated for them, and that is monitored. Because people do listen to somebody else's advice. So if they listen to advice, the person giving advice should be qualified to give it. And after receipt of advice, the investor should have enough information in his hand for him to know what is being given is good or bad. In this case, about the corporates, about their income, about their future plans, all are available in forms of various financial statements which are regulatorily required to be filed on a periodic basis, online real time, so that the investors can have access to it. That's the second part. Third is, when a stock is not behaving normally, there are a lot of surveillance mechanisms stipulated by the regulators at the broker level, at the exchange level, at the regulatory level to take actions about. Notwithstanding all that, if there are financial frauds, there are chartered accountants who regularly check it out. There are merchant bankers who regularly check it out on different occasions. Chartered accountants will be checking it out in the form of periodic financial statements. Merchant bankers will be checking about utilization of the proceeds of IPO. All these checks and balances are put. As you would appreciate, every check and balance is good at that point of time. Going forward, scamsters and fraudsters will find new ways to defraud. So regularly and repeatedly, the market intermediaries and the regulator should go to the public to caution them. That we also do. SEBI, which is our regulator, join hands with market infrastructure intermediaries, goes to every town in the country and calls the people for a seminar. In person, we try to tell people how they should be careful. As you would be knowing, the recent past, because of artificial intelligence, when you and I are talking now, it could be mimicked as if I am giving you some stock advice and put across.
Yeah, that's right.
It happens. So people have to be careful. I can give a UPI handle which is fake and fraud and which is not approved, and you will be ending up paying to it. So SEBI has evolved a mechanism where you can check on your own whether that UPI handle is right or wrong. It's correct UPI handle or it's a fraud UPI handle. So like this, there are multiple measures right from the regulator to the level of infrastructure intermediaries are being taken. Recently, we have done one thing which became a very big hit. People started loving it a lot. What we have done is like newspaper, like advertisements. The program may be boring. When an advertisement happens, everybody looks at it. Why? It's very interesting.
Yes, that's right.
So why it is interesting? It is always in a social atmosphere. A family, a dog, a grandmother, a child, a parent, all these are brought into this. It's a homely, relatable atmosphere. So what we have done is investor awareness programs like that in 2 minutes or 3 minutes clippings. One surname in Maharashtra is Mane. So when you use a surname, people will be able to relate it to a common man. We call it as Dr. Mane videos. In that, through simple real-time situations, the person who is called as Dr. Mane advises people what they should be careful about. So these type of steps are taken to fight against fraudsters and scamsters.
Thank you very much for your insights. And I believe you have very tight time. And maybe for my last questions, you are here as part of bigger cooperation between Indonesia and India. Can you share with us your expectation and your wants to share with Indonesia for the cooperation in the future?
Sure. My philosophy has always been, coming from the upbringing of my regulators of me, capital markets are for public good. Public is just not one country, it's the entire world. And India and Indonesia are very close to each other in multiple ways. As exchange, BSE has been very successful in multiple areas. 3 areas where we feel that we have something which we are ready to share is how to make small and medium enterprises raise capital and contribute even more to the economy. Because we see that there are large, small and medium enterprises in India, same way in Indonesia. We have a separate platform. We have certain experiences and knowledge. That's one area where it will be worth sharing each other's experience. The second area is the growth in mutual funds. We have a separate platform through which we have spread the message of mutual funds across people. Today, I have 80,000 distributors who are using my platform, which is called a Star MF platform, across 720 cities and accessing a significantly large number of mutual fund users and bringing in the much needed money, investment from them into the capital market through the mutual funds, through safe routes. That one area is a very big success. We feel that is something where, given the size of the population of Indonesia, the interest of Indonesia, we may have something to learn together. The third area is economic indicator, as I call it, market index numbers. We are very good in creating indices and making them as economic indicators. And those economic indicators are used by insurance companies, mutual fund, alternate investment fund providers, many people, because it's a diverse portfolio created and made into a small number. So it becomes easy to understand and assimilate and invest. So there we have been doing a significantly large amount of progress. It's another area where we can jointly learn.
Okay. Thank you very much. That's a wrap for today. Thank you very much for the insights. And we hope that our country's cooperations, especially in corporate and capital market, will be fruitful in the future. Thank you very much.
Thank you so much.
Thank you very much, sir.